Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavalu, and we've got longtime fools Matt Frankel and Lou Whiteman giving a 1 to 10 rating to the home improvement store that has almost twice the amount of sales as Lowe's. It's Home Depot, ticker symbol HD. Talk about the business first, including factors like industry and competition. We already talked about Lowe's. A 10 is invincible, a 1 is hopeless. Lou's given a 9, Matt's given a 9 as well. We'll start with Lou.
What's not to like? I mean, honestly, here, they are the go-to retail destination for a wide range of products that consumers buy in mass often. Technically, there is competition on it. You mentioned Lowe's, and yes, I respect them, but there's plenty of room here for a duopoly. The big two have such size and scales advantage over the Mon Pas. There's nothing to get worried about there, really. I favor Home Depot over Lowe's in my own portfolio because of their better professional services businesses catering to the tradesmen and contractors. If there's a knock on this business, it's not going to be a tech-like growth story, but there is a whole lot to like in Home Depot.
Yeah, I agree. Lou kind of hit it on the head with the duopoly thing. I mean, I honestly can't tell you who the number 3 home improvement retailer is off the top of my head. They have about $160 billion in annual sales volume. It's a massive, massive retailer, and it's a resilient business even in slow times. In great economic times, people are borrowing money against their homes. They're investing in renovations, things like that. In slower times, it's actually been a great environment for the home building market. And there's a lot of things they sell that people need. So there's a lot of kind of offsetting parts of the business. So that's why I gave it a 9.
Yeah, I think of like Ace and True Value, but different type of stores there.
Different world. Yeah.
Yeah. So
but which one's number 3?
It might be. I was trying to look it up real quick, but I didn't quite get to it. Maybe by the end of this, I'll blurt it out. Let's talk about management. 10 is Warren Buffett. 1 is Homer Simpson. Lou's giving a 7. Matt's giving an 8. Why the 7, Lou?
So I'm guessing a lot more people could name Bob Nardelli, their former CEO, than can name Ted Decker, the current one. And I mean that as a compliment to Ted Decker. Decker is the current CEO. No nonsense, no drama leader. He's been with the company 25 years. He knows the business well. He managed the company's supply chains through the pandemic before getting the CEO job, which is kind of a great feather in his cap. I don't worry about a guy like Ted Decker at the helm, which is the best compliment I can give for a company like this, where slow and steady is the bet. And so he scores real well for me.
Yeah, it wasn't just, Lou mentioned during the pandemic, they managed supply chain really well. It wasn't just the supply chain. They did a great job of pivoting to things like curbside pickup, and they did a better job than most retailers that are not like massive like Home Depots to kind of keep their sales going. He did a great job of navigating the bear market of 2022 when we immediately went from everyone pulling equity out of their home and renovating and things like that to no one doing it. They navigated that without sales falling any meaningful amount. And the extremely slow housing market right now, they've navigated really well. So, I mean, he's only been CEO for coming up on 3 years in January, but it's been a pretty impressive run so far.
So, at least in number of stores, I was surprised. Ace actually has more stores than Lowe's and Home Depot combined. Now, of course, different size footprints and stuff like that.
Yeah,
but it is a player.
And not company owned, but yeah.
Yeah, I believe they're mostly franchises.
Yeah.
There we go. Financials. A 10 is a fortress. A 1 is yikes. Both of you give an 8. Lou, why the 8?
So there are a lot of stats I could pull here. I'm going to go with 2 that really resonate with me. Matt sort of hinted at it, but this is a lousy market for home improvement. Terrible time in the housing cycle, time with consumers are pulling back a bit, and they generated in their last quarter $40 billion in sales and 13.5% operating margin. So that's what this business can do when times are tough. 16 billion plus in free cash flow over the last 12 months. A lot of that's going to buybacks, resulting in a 25% reduction in the share count over the last decade. Again, maybe it marked down a bit because there is a ceiling on growth here, but what's not to like here? This is just solid as it comes.
Yeah, I agree with Lou, but I will give you one thing not to like, and that's debt. Home Depot does have $65 billion of debt. Their quarterly interest expenses over $2 billion. Like you said, great margins even with the debt, but that's just something to keep an eye on. And it makes companies a little more vulnerable in bad environments.
Let's move on to valuation, Matt. How well will Home Depot stock do over the next 5 years? And how safe is it, keeping in mind a 10 is a sure thing, a 1 is a lottery ticket?
I said 5 to 10% returns over the next 5 years with a 7 safety score. I do see Home Depot rebounding nicely if interest rates do end up falling in 2025 like is expected. And I mean that in both the terms of sales and stock price. They could also be a big winner if the incoming Trump administration lowers corporate taxes like they've talked about. Home Depot has a 24% effective tax rate, so they would be kind of a disproportionate beneficiary of that. But it is a somewhat cyclical business, and if there's a recession or something like that, that could completely bust my 5 to 10% range.
So I'm at 5%, 5 to 10% too. For all of we've talked about a bad market, the stock has had a really solid year. It's up 22%. I think a lot of that is the market anticipating this rally. So I think it's going to take some of the starch out of the rally when a recovery actually comes. So I basically have this as a market performer with the total return, with the dividend, probably towards the 10%. For safety, I'm at a 9. No equity is completely safe, but it's hard to imagine this thing just disappearing. We've seen the power of this business through a downturn. Unless there's an Enron going on here, I don't know how you lose money on this, or at least I hope so because I own it.
Time for everyone's favorite topic. Matt, is there a company in Home Depot space you like more?
I mean, other than Home Depot and Lowe's, I'm not aware of many more companies in their exact space, but I'll go with Trex, Trex. It's, they sell their products at these big home improvement stores, but I like that as a better, if you believe that the housing market will recover, people, rates will come down, people will be able to pull money out of their homes. Trex is a really interesting play right now.
So again, yeah, I think Home Depot is the best at what they do specifically, but a little under the radar thing, Beacon Roofing Supply, BECN. This is something I spent a lot of time looking at recently, under the radar, but it is a really well-run company with a great tech stack for this industry, available for about half the multiple of Home Depot. So at least one to look at is more on the contractor side.
For those who perked up with Trex, we're doing that pretty soon, actually, on scoreboards. Thanks to both Matt and to Lou. They've given Home Depot a solid overall score of 7.5 out of 10. That's up slightly from the 7.1 when we did it the first time with Bill Barker and Jason Hall, but pretty similar scores. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Etsy. Till then, Fool on.
Matt, we were a lot closer than I thought we'd be on Redfin.
Yeah, I was kind of surprised on that too.